Welcome, ladies and gentlemen. This is Rob. Welcome to the Market Intelligence Report, which is for the week of the 17th. Yes, the 17th of January, 2023. Remember, Monday, the 16th, the market is closed. And what a week it has been. I am blown away by some of the results of what we've seen happen here. Let's go jump in and take a look. Man, we are just diving into this sucker today. So what's happening here? Well, if you look at the bigger picture of what's happening, you see this downtrend line. I'm going to zoom out on it in just a moment so you can see the entire thing. But look what happened. Wednesday, we just barely closed above that downtrend line. Now, we've closed above it recently before. We haven't closed above it very much in the past at all, right? We're up there, but we have closed above it, right? And then yesterday, we gap up, we pull back, bulls and bears fighting like crazy in there, but we close with a higher close than the previous day, than Wednesday. Today, we gap down to where? Where else? To the trend line. Folks, everything happens for a reason. It pulls back to that trend line. We stretched down a little bit further on the open, and we bounced, right? So the bears tried, and they fought, but they lost. And the bulls were able to push and close up higher than it closed on Thursday. So what's going on here? What's our next step? So hold on a second. Just because we've had this run up, that doesn't mean the bearish market is over and the economy's back in shape and inflation's under control. Yeah, we had a flat CPI. We had unemployment was okay. But we're not by any stretch of the imagination there yet, right? Inflation is still very high no matter how you slice it. Oh, it's better. Listen to the government. It's better, right? The governor here, the president, everybody, it's better. Yeah, it's better than it was, but it wasn't good to start with, right? It was much better a year ago, right, than it is today. So if we look back at a weekly chart, we've got to look at the bigger picture, right? Look at the weekly chart. This is the best weekly close above the downtrend lines that we've had yet. The best one. We have not closed as high as we have. This was the only other time in this entire down move from December, November, December of last year, of last year, of 21, this is the first time we've closed above. If we look at our monthly chart, on the S&P 500. We've got a nice close above. We barely caught it with that corner. We opened up above and then failed for last month, right, for December of 22. But you can see, once again, this is the first month, and we're not done yet. Remember that on the monthly, we're not done. But this is the first month that we are sustaining above that downtrend line. So when we go back and look into the daily chart, well, actually, before we look at the daily on the SPX, let's go look at the VIX. We're at our lower end of the VIX right now. What does that mean? Well, my green zone is 18 to 29, right? In that zone is a good zone if you're a combination buyer and seller. If you're a seller, you want it on the higher end of that green, lower end of the red. If you are a buyer, you want it into that yellow zone. The farther down you can go, the better off. Give me like 10, 11. That's awesome. I buy really cheap, low vols on there. Life is really good, right? If that's who you are. For me, who I'm a combination trader, you may be one or the other, or a combo. I put it at that 18 to 29 level. So we're just at the very low end of that, the lowest quadrant of the green zone, potentially breaking into, we did dip into it today, into that yellow zone, all right? So fear is down immensely right now for us. So let's go back then to the S&P 500. So we're there now, Rob. What's the next step? What do we have to do? All right, a couple of things. First thing is, we don't want to just see another continuation move up. You got the close above. You got the move higher. You got the gap down to that line today, stretch down and the bounce. Beautiful, beautiful setup, which said go and crush it with your intraday trades. We just did about 7 or 8 trades between Wednesday, Thursday, and Friday, quite a few of them for today, based on what happened with the S&P 500, because I just recorded power option plays. So we're looking at that 40.25 is the next upside target, right? That's number one. 40.72 is the next one above there. So write those numbers down if you don't have them. Or, of course, check them out in next week's video, right? And then from there, we need to get above the recent swing high. I just put this back on in power option plays and said, listen, guys, we have not had a recent swing high in how long? It's been forever since we've seen that on a chart, that I've had to introduce that to a chart. And here we are again. We're going to press up against that. So to me, true bull, and when I say true bull, to truly be bullish, we need to get above the recent swing high that we had. To get back into the higher highs and not a lower high. We still are at a lower high. So yes, we can have some bullishness along the way. And here's the thing. I am not out there saying that everybody who's saying the market's going up is wrong. There are going to be some that can claim I called it on that candle, that was the day that we were bouncing from that, and they very well may be right. I am not the trader that's trying to get the lowest low and take that highest risk of picking the right place to get in on my trades, my entries, right? My swings or my investments. I am looking for the lowest risk in the trade, and that, ladies and gentlemen, was not the lowest risk place. We had a lot of slop in there. Yeah, you may have bought a stock right here or a call option right here. That pullback, you ain't holding on to that thing. If you are, you just don't have stops in place. And you do chibazo. Okay, you crazy in the head, right? I'm not going to hold on to a trade that far down. It's too big of a hit to deal with that. Oh, I bought here. Oh, but then I got down and ran here. It's the same all over the place. You may have bought a call or a put right here as we're going down and it gaps up the next day. Right? There's too much inconsistency in the moves of the market. For me, the way we talk this out each and every week, that I do each and every day, the things we do in market mornings every week, and the way we talk about the way stocks move and the markets progress, this is the right way to take the entries to me in a trade. It doesn't mean it's the only way. It's the way that works best for me. Are there going to be some that will dispute the way that I do it and say, no, he's wrong, I do it this way? Beautiful, you go for it. You go for it. There's 1,000 ways you can make tomato sauce, right? Maybe 1 million. Maybe 100 million, who knows, right? That doesn't mean my way is wrong or right or anything else. It's just the way that works best for me. No different here, all right? So watch for those swing highs, get above the recent fib lines, move above the recent swing high, and that is when we're going to start looking at more bullishness in the market, all right? With that, make it a profitable day, and I will see all of you next week. Remember, Monday's a holiday. We'll be back with this report again the following week, on Friday. Take care, folks. See you soon. Bye for now.